Hello, I'm Ben Gutteridge, Director of Model Portfolio Services here at Invesco, and welcome to our first market briefing, a 2-minute rundown on the major events that have plagued markets in the previous month. And January was a busy month for news flow. At the start of the period, we saw a US drone strike kill a top Iranian general. We saw a response from Iran that damaged US military infrastructure, but crucially didn't draw American blood and didn't cross that red line, which allowed both actors to consider measures as proportionate and tensions de-escalated. Markets would be most troubled, I think, if we saw events that led to an all-supply shock and sent prices higher, because that could really eat into consumer spending power, and so is a story that we continue to monitor. But markets did move on, at least temporarily, and then were much less forgiving to the outbreak of the coronavirus. Now, it's beyond this commentator's sphere of excellence to suggest how pervasive this illness may be, but we can observe that there has been seemingly a robust response from authorities, both public and private, that have worked essentially to limit travel and contain the spread of the virus. Now, it is entirely the right response to limit the threat to human lives, but is likely to pay a heavy toll on economic data in the short term. Now, what are we to do with this as investors? Well, primarily, I think it's worth reminding ourselves that if we had let geopolitical events drive and dominate investment decision making in the past, that could have delivered some pretty poor investment outcomes. I think it's better to remind ourselves of the current economic context. And what is that? Well, we've seen a slowdown in 2019, but we've seen a response from policymakers cutting interest rates or governments spending more that should be helpful for the global economy. And what is more, there is an absence of inflation in the system, which suggests economies are not overheating, which will allow governments and central banks to continue to extend a generous policy mix, again, which should be good news for the global economy. So the net outcome, notwithstanding the threat, of course, of the coronavirus, is that a recession, an extended economic slowdown, isn't the base case. And in that environment, stocks and corporate bonds look the most compelling asset class. Now, of course, also this month we saw the UK leave the European Union. I don't think it was a big event for markets. It was so well telegraphed. What could potentially have more impact moving forward is the progression of talks, given the very tight deadline that we've set of securing a deal with our European partners by year end. But of course, we'll commentate on that as it develops. But for now, that concludes our market briefing for this month. We hope you've enjoyed it. We welcome any feedback or, of course, try to respond to any questions you may have. I'd like to take this opportunity, of course, to thank you for your support of the Invesco Model Portfolio Service. But until next time, many thanks for joining us, and we look forward to speaking to you again next month.